The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we've arrived at the day. We'll see what happens today. May everyone cast their vote the way they see fit. Okay, let's take a quick look at what we see going on today. First of all, we're going to look at the German DAX like we always do. If you'll look at this German DAX, this comes from one of my students from London. And you'll notice that they trade the DAX over there quite a bit because of the time difference, and it's got pretty good volume, but nothing like what we have with the S&P. The thing that we're looking at here is you notice that we had this thing had a pretty good rally yesterday, but then it gave a lot of it back. And the other thing is you can notice that it has downtrend in the picture here. We've been going down for quite some time, so this is still in a bear market. All this can change, with the election. We're going to go into that in just a little bit. We are fortunate enough today, we're going to have our good friend Arch Crawford on at the break from Crawford Perspectives. He's going to talk to us a little bit about the economy and everything, so we'll watch it. By the way, folks, I was treated today. Usually when I get up in the morning, the first thing I do is to turn on Bloomberg or CNBC. Today it happened to be Bloomberg, and they were featuring Terre Haute, Indiana, which has correctly picked the last 22 elections. Problem is they wouldn't tell us what was going to happen today. So who knows? My sister and my brother-in-law live there, and they're voting Democratic. They would vote for an armadillo with a sticker on his back if it was a Democratic armadillo. So that's just part of our heritage of being a little Italian immigrants living in Terre Haute, Indiana. Okay, the next one I want to show you is also from CNBC that shows you the relationship that you have here when a president gets elected. You'll notice from Woodrow Wilson through Roosevelt, Truman, Kennedy, Johnson, Carter, Clinton, and Obama, you'll see that usually when the Democrat is in, the market does go up. Those are historical figures that you're looking at. But again, when you're looking at this, you're only looking at 8 samples. So that's not really a very good sample size. You need a sample size of 100 to make it statistically accurate. But the thing that's interesting here is that if the Democrat candidate is elected this time, that means we're going to have 32 years of a Bush or Clinton administration over the past in these past 50 years. So that's really skewed. So we'll see what happens with this. But we've got some problems. The main thing that they mentioned on CNBC today was the fact about Janet Yellen, whether she'll be able to keep her job. That I don't think that means anything because they're already locked into the Fed, what they're doing as far as quantitative easing. They have taken the what we call the business cycle and have shifted it. We used to have a 4.5-year business cycle, ups and downs, but that changed in 2008 when they brought in quantitative easing. Another interesting observer this morning was Jim Grant, who happens to be a friend of mine from Interest Rate Observer. He's been around for a long time. He is the premier man about interest rates, and he talked about what the Fed has done has not helped us very much at all. In fact, it's hurt us a great deal, and we'll probably have to pay the price down the road. I firmly believe that too. How it'll all work out, I'm not really sure how that's going to work out at all. Let's just take a quick look at the markets. One of the things that we were looking at here was the VIX index, and as you can see here, we went down a lot lower. I posted this in as of yesterday, but not before the close. It got down to 16 in the VIX. You notice we had some really good what we call parallel moves. You can see the one in June into the Brexit vote, and then we have this one into this. See, I really wanted to short this today, but with the market coming down today, I would be biased to the bull side. I listened to what John Logan said today. This is pulled back to almost a Fib pullback around the 16 level. in the VIX. So that's one of the things that I'm watching. The way I'm handling the VIX, the market today, is I am waiting to see when the first votes come in from Florida, and right before the votes are announced from Florida, I'm going to short the S&P. I had to put about a 20-point stop on it, but that's what I'm going to do. Whether that's going to be the right thing or not, I don't know. But frankly, it looks really interesting. All I can tell you, folks, is that when people wait in the mud, in the rain, in freezing rain in Michigan to see someone come in and talk, you have to pay attention to that, because they don't need any motivation to come out and vote. They don't need Bruce Springsteen or Stevie Wonder or anybody else, Beyonce or Jay-Z. They don't need any of that. They already have their minds made up. Whether that's going to happen or not, I don't know. But we'll be through. No matter what happens, folks, we're going to make it through. I really believe that. We've been through, world wars and everything else, and we are going to be okay. And we'll see what's going to be happening. Yes, we could see 2150, 2170 really easy in the S&P. And the reason for that is, folks, let me just quickly show you the New York Stock Exchange Index chart. We hit that perfect 61% retracement, beautiful ABCD pattern. This is why we were looking for a rally. I wasn't expecting, quite this much, but we had just completed the ninth day where we had the longest losing streak in the S&P in 35 years. Now go back 35 years and see what happened after that 9 losing streak. The market rallied a little bit and then continued down for another 2 years. So this is something that you got to keep in mind. This is very emotional, folks, not just on the voting thing, but in the stock market too. You're seeing emotions that we haven't seen in a long time, and that's good for pattern recognition trading, because you're going to be able to see that the market follows the trend, and that's what we have going. You have to respect this huge gap up. I mean, believe me, this is really a powerful move. Just go back and look at the Brexit gap up. Look back on the 27th. You'll notice that we had another huge gap up, and that just continued going and going and going. I happened to be in the UK visiting one of my students. In fact, each year, some of our students invite Sarah and I back to visit them, and we spend time trading with them and doing some vacationing and staying in their homes. And everybody that we met there, everybody said that Brexit was going to be a lost cause, and everybody that we met, I mean, we were talking 20, 30 people, all of them said that they were going to leave the European Union. And then when the voting came out, my gosh, it was a landslide the other way. So these polls, I don't know where these people get their numbers, but you got to rely on what's going to happen here. We'll see what's going on here. Someone's asked a question about what will happen to the Treasury bonds over the election, folks. Anybody's guess is as good as mine, and mine is basically a guess. I think that we'll probably have some type of a rally because we're very oversold in bonds. We're down about 15 handles from the high that we made at 177, so we could easily get a very good rally in that also. So that's what I'm seeing, early election day. But how it'll happen today, who knows? But that big move yesterday was, that could be a game changer, just like it was on June 27th. We'll have to wait and see. And one thing the market does do is it does surprise us more than we'd like to think it does. But that's what's happening. So we want to watch this very, very closely. See what's happening here. We really don't know what these markets are going to do. Nobody else does either. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, let's quickly review where we were during the Reagan administration. This was the last time we had a possibility of something, really crazy happening. And as you'll notice, that Reagan was elected in November of 1980, and as you can see, the market continued to go higher into early 1981, and then began to drop, and it dropped almost 40% in the stock market from 1981 to the middle of 1982. The market actually bottomed on August 9th, 1982. I happened to be down on the floor of the Chicago Mercantile Exchange during that time. You're not going to believe this, folks, but the S&P was trading at 103. That's 103.00 as opposed to 21.25. And that was the bottom of the market. There was nobody in the S&P pit. There was just no interest in it at all. The Chicago Mercantile Exchange had originally tried to get the Dow Jones as the leading indicator, but the Dow Jones family would not allow them to use the Dow Jones name. Leo Malamed worked very hard on that. My good friend, in fact, my best friend, Byron Tucker, was all part of those negotiations because he was working with Leo as his right-hand man at the firm that Leo owned, the clearing firm at the Merc, which I have totally lost the name of it. Anyway, neither here nor there. In August of that year, the S&P went from 103, and of course it's gone up to the high that it's made so far at 2194, I believe. But we'll see whether this is going to be the same type of a situation. The cycles will usually tell us to where we're going to be, but right now we're in an area where there's just so much emotionalism. We have a little sign, a political sign here in our neighborhood of 79 homes in this little gate-guarded community here in Tucson. And believe it or not, folks, 8 times in the past 2 weeks, someone has torn our sign out of the ground and thrown it on the ground. And I can't believe this because the average age of everybody in this neighborhood is about 70. So it's really quite amazing to see the animosity. Yeah, that's exactly. What does the Trump say? What does the sign say? Yes, I believe we're due for some change. So that sign does say Republican, but we'll see what's happening. But we I use claymore mines around my house. These are the things where you step on them, they pop up in the air about 3 feet and then blow up. But none of them were operable, so that made it a little more difficult. We're going to have Arch Crawford on at the break. He lives here in Tucson also, so we'll talk a little bit about this. He has some things to talk about as far as the economy and also as the election, and see what's going. Yeah, that's right. It was Gator. You're right. It was called a bouncing Betty. That's really what what it's called. So anyway, we'll see what's happening. You guys don't. I wasn't doing this many years ago with you guys. I started in 2007 doing the show, but in 2000, we were having Y2K. That was a big thing, and we were having all kinds of ideas that the world was going to come in, and you wouldn't be able to use your cash registers and get food and stuff like that. So none of that really happened either. So remember the words of Anthony Robbins. All of your fears that you have, really 99% of them never really happen. So fear is false evidence appearing real. So no matter what happens, we're going to make it through this. We have some pretty smart people in this country, and we have some people that do want to see change, and we'll see if it's going to be if it's going to happen or not. But no matter what happens, we're gonna be okay. Don't worry, baby. That's right, Duffy. You flat out got that right. Okay, let's go on to the next one. We have a question about the Tesla. I wanted to bring this up into the move here because we have a question about it, get backing into the markets here. We had a little move up in Tesla. It's given a little bit of it back, but it looks to me like we're still heading down to that 174, 173 level in Tesla. It's got a lot of patterns coming to that area. It didn't have a much of a blowout upside that we had in some of the other things, but that's the main thing. One of the big movers to the upside, of course, was the Dow Jones Transportation. That really took off yesterday. So that's an indication that the market is pretty strong. And believe me, just like in the Brexit thing, we had this big gap up, and we could easily go a whole lot higher. So we have to prepare ourselves for potential new highs and even far beyond. Who knows what would happen? But this is what we're looking at. People in Europe are very concerned about what's going on over here. We have friends and students all over the world, many in the European community, and we've heard from them, and they are quite concerned about what's going on and who's going to be elected and stuff. And we basically say, well, we just have to wait and see what happens, just like your Brexit, or when you get a new prime minister or a new foreign minister, like they could be getting in some of these other countries. That'll change things for a little bit when we basically get back to normal economic cycles and the patterns. That's really what we're watching, at that particular time. So it's going to be interesting no matter what. That's the key to look at. Now, someone's asked a question to look at the Brexit thing, and here's what was happening during Brexit. This was a lot different. This was the British pound, and as you can see, the British pound up here was making this beautiful 1, 2, 3, 4, 5 expanding triangle pattern. We had 3 drive to a top pattern. We had 3 different ratios, 3 different patterns coming in there at the same time. So the risk at this, when the pound hit 150, was very, very small. Because it was going to be crazy, you had to risk a 1.5, which was $900. But the most it went above 150 was at 150.45. And then when the first polls started to come in, you see the market collapsed, and that was a monster move, to the downside. So those are outlier events. You're not going to see that very often, and that's what we could be seeing today. We could be seeing an outlier event. There's enough emotionalism in this thing like nothing I've ever seen, folks, and I've been around for 8 decades now, and I've never seen anything like this. This is going to be, it's history no matter what happens. There's no question about it. it will be fun to watch no matter what we decide that we're going to do. Now, there's another market that looks like it's poised to go a lot higher, and that is this dollar yen. Let me just get this up so you can take a look at it. We had a really good move in it, of course, coming off of that point number 5, which was down at the 50% level. There again is that 135 pattern that was given to me by Roy Longstreet. And now we popped up quite a bit above the 104. We're trading the 104.70 level. So this one looks like it's making a pretty good bottom in here too, because we've had these multiple bottoms that are higher. Of course, we've had lower tops too, so we're in this really tight triangle. But the bias at this particular time, appears to be to the upside. That's what we're keeping an eye on so far today. Okay, now someone else, one other question about the Treasury bonds. Here's what this is where I think we stand in the bonds, folks. We're really at a major level here. Even if we come down a little bit, I still think we've got a chance for a little bit of a rally. We've gone from 177 down to 161. That's 16 handles. That's a lot. That equals what we did from April to June. So we're due for a rally in bonds. 877-927-6648. Stay tuned for Arch Crawford.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're having a little difficulty reaching Arch this morning, so we'll hold on and see if we can get him. But let's move over to the live cattle market. We're not able to have Rich on this week. He's still doing some work with a very, very dear friend of his who is fighting the Big C and doing a pretty good job at it so far. But let's take a look here at the cattle market, because you're going to see some really nice harmony here. You'll notice that we had these moves where the market moved 12 days up. Those were equal moves. That just shows you how technical, analysis can really be a helpful, thing to look at. Now, if you're noticing now, we're almost down to this $1 a pound level in cattle again. And this is where you're going to see a 61% retracement, and you're going to be looking at a head and shoulders pattern here in the cattle. So this would be a very good spot to take a look at cattle, because you have several things that's telling you that this could be a pretty good bottom in cattle if we get down to this 100 level. And of course, you're going to have to risk about 2 cents a pound, which is around a little over $800. So, but that's it. These have big moves. We went from 97, to 105. That's 8 cents in cattle, which is a little over $3,400 per contract. So you have to take into effect how much you have to risk in order to enter this, and this is what you probably be looking at. But right around $1 in cattle. We'll follow this over the next few days and see how it works, and we'll go from that level. Now, the next thing we wanted to cover, of course, is this oil, because it's still not out of the woods. It just doesn't want to rally too much. In fact, someone's just asking a question about it. We're still in this area. We did make a higher high than yesterday by a little bit. We got up to 45.10, I believe, last night, and now we're trending back down again into the lower 44 range. If we close below 43.50, this is going to be pretty indicative of a market that wants to go lower, but it's got the things necessary to set it up for a pretty good trade. That's we're trading at 44.60 right now. All right, let's just take a quick look where we are. The gold is still about unchanged on the day after being down $25 yesterday. The S&P has sold off about 9 handles from its high. But believe me, folks, it's going to be wild overnight. That's my opinion, because of the fact that we have these, this election, and the whole world is watching it. We heard this from our good friend John Logan and his guest from Switzerland, and then also from Hong Kong yesterday. People are watching it very, very close, as they should, because it's going to be a very important thing for the next 4 to 8 years. Whether the markets react as much as we think they're going to do, we'll have to wait and see. But they're set up for, when you see a move we've had since March in the S&P. So there's going to be some really wild things happening. Now, what's different about this one as opposed to the other one is in Brexit, it gapped up 2 days in a row. It didn't gap up today. Now, I don't know what the reason for that is, but maybe it was just a one-day wonder. We don't know, because it was certainly an outlier event. And that's what we really need to watch. But keep an eye on that crude oil. It's got a chance. It's not doing it very much right now, but it's got a pretty good chance. Now, we've had to take a look here at the really long-term picture here in the S&P, because this is a very bearish pattern long-term. This is this 5-point symmetrical triangle that we've looked at. You'll notice that we had a double top in 2000. We had another top in October of 2007 before we had too big to fail for all the banks. And then we had the quantitative easing bull market from 2008, and it's still going on. And we've completed all these patterns. You'll notice that we did break into new high ground, but we've given all that back. So that's telling us that this market has still got some possibility of more to the downside. But there's a giant pattern completing here, folks. History says that it will, you're going to see a pretty good correction. I think the logical place to look at it is if you look at points 1 and point 3, those are the old highs. That would be a logical place to see, support come in, and that would be, down around 1590. in the S&P. That's quite a bit away, from where we are presently. But that's one of the things that we're seeing is this long-term pattern still is in effect. So and you're seeing things that'll tell you that it's a little more bearish than you might think. However, if we take a look, switch over to copper for just a minute. We've had a question about the copper. You'll notice here that copper, once we broke out of that declining tops line that occurred at the 222 level. That's, if you remember, I believe that's when John Logan became very, very bullish above that level. And now we've gone all 10 cents higher. We're up around the 2232 level. And what we've done now is we've completed a 1.618 expansion of the AB leg. In other words, the CD leg is 1.618 of the AB leg, and we have two other patterns that are completing at this point. And what it's doing is it's taking out the high of February of, March 7th of last year when we got to 232. So we've gone above that a little bit. Now, if this market's really good, it should continue screaming. But if it doesn't, that's going to be the first sign that, we better pay close attention to this, because we're looking at something that could be, really, really, really interesting. So we'll watch to see what's going on for that particular thing to occur. I don't know what's happened to Arch today, but we'll not worry about that. He does keep crazy hours like I do. And I posted into the room, one of his things that he was talking about, but I don't want to steal his thunder. So we'll try to get him on tomorrow. Since we don't have him today, not going to worry, too much about that. That's the key, to be watching here, and we'll keep an eye on it. Let's switch over here to the gold market here for just a little bit. You'll notice when we rallied up, there's a perfect example here in the gold market where you rally up to you see the old lows that we had during July, August, and September, how we rallied right up to that. That was an exact 61% retracement off the high in September, right at the equinox, and now we've come. We got down all the way down to the 1278 level. This is what we need to watch, because if we get gold down to about the 1265 level, that's going to be a pretty good buying opportunity, I would think, for at least for a short-term bounce. Longer term, the gold has to get above 1320 in order to be bullish, in my opinion. We've got to bust through that old resistance that we had there at 1309, and if we do that, then we've got a pretty good chance of a run here in gold. And there's always that possibility. Now, silver is really lagging badly. We mentioned that on the show yesterday, and nothing has changed. And, we're still down near the support that John Logan talked about yesterday at that 1810 level. But frankly, it doesn't take much to break that support, and then you would be heading to see what's going on over. Folks, I'm joking about the Claymore mines. I hope you realize that. Those things are illegal. And the only reason I say that is I love old movies. And, of course, one of my favorite is The Halls of Montezuma, and I'll talk about that in just a moment.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we're back. I take a little bit of levity away from the election here, but I love old war movies. From being a little shaver back in Terre Haute, Indiana, we always played soldiers when we were little boys. But one of my favorite movies, there's 3 favorite movies in the war category. Number 1 is Where Eagles Dare with Clint Eastwood and Richard Burton. Broadsword to Danny Boy, broadsword to Danny Boy, come in, Danny Boy. The second is Clint Eastwood, Kelly's Heroes. And the third is The Halls of Montezuma, which was in the 1950s. You won't believe the stars are in there. Martin Milner, Jack Palance, Robert Wagner. I mean, it's just one after another. We had... oh dear, there's so many of them that's just happened. And also, one of the guys in there, you won't believe it, is Jack Webb. You know, Joe Friday from the series that we had in, I can't even remember what it was. It was Joe Friday, but I can't remember what the series was. Anyway, but he played, Jack Webb was a very famous actor and producer. That was one of his first movies. So it's really a great movie if you want to watch something to see all the old stars and how they, Dragnet, that's what it was. Very good. The old senior moments are coming faster and faster, folks. They're coming down the line as we head for that final poll at 8 1/2 furlongs, and I'm 7 3/4 furlongs into that race. So we'll see what's going to look at. Someone just made a nice trade here in the Tiger Den today. They just said we should buy the S&P at 21.18, and it's quickly given them 5 points. So we have some happy campers here at the TFNN Den this morning, but you know, it's still a little bit early. It's very, very quick move, though, from the 21.18 level to the 21.23. But it's going to be really wild no matter what you see today, folks. I don't think there's any question about that because of the fact that the emotionalism behind this election is greater than any we've had in, I mean, nobody can remember anything as emotional as the one that we have, you know, going on at this particular time. This is many times bigger. I hate to, you know, say, you know, it's bigger than Brexit because, you know, I don't want to rain on their parade over there, but you know, that was a big thing for them to move out of the European Union. But this one is a little more lasting, I think, because, well, that's my opinion. Let's forget about the thing to look at, not to worry about some of the things that we're seeing here, but we'll go from one to the other. All right, the next thing we want to look at here is the silver market. We've had a question about that silver, and I just wanted to show the reason why that has some negativity in the silver is because you see we did the same thing as we did with the gold. We came back and we tested those old lows that we made during the September-August area, and that was also a 20-man line that it hit at 1875. So we need to get silver above the $19 an ounce level, and then it could really have a pretty good move to the upside, because there's still a possibility that this is a big move to the upside. And the reason why you say that is the fact that we were down from July through October. We've had a good rally over the last 5 weeks. We backed off a little bit, and if we come back strong against it, that's going to be a very, very bullish sign. And given all the things that are happening in the economy everywhere, you hear people come out, and talk about gloom and doom. You have people come out and talk about wonderful prosperity. Remember the words of Paul Tudor Jones. Everybody has an opinion, and it usually smells. So it's like an armpit, folks. You got to remember that their opinion is just their opinion. You're the one that has to make the decision on whether you put a trade on and how much you're going to have to risk as you walk through, some of these things that we're watching. That's the main thing to keep in mind, that you're the one that has to take the responsibility, nobody else. One of the things that what I do here is when I do my service for 24/7 for TFNN, always in the back of my mind, I'm always concerned about Tom O'Brien and his wonderful organization and family, because I can't take, really big risk, which I don't do anyway. So I have to be more selective than I ordinarily would do. So I watch to see which trades I can get in with the least amount of risk. That's what I'm really trying to do when I'm trying to find some of these. So that's the main thing that you got to keep in mind. Someone's asked a question here about Priceline Charlie down in La Paz, Mexico. As we see today, Priceline is up 88 points. It's broken into new high ground. One of the reasons it went into new high ground is they're scaling back on their I forget what's open order or something like this, that you order your seats, open seating or something like that. They're scaling back on that. So we'll see what's happening to that particular stock. We'll look at that. We haven't heard from Priceline Charlie in a long time. I know one thing for sure. He does not stay short when it keeps going up. That much I'm certainly be looking at. There's a possibility that, that Arch is out voting this morning, because I know he's really strongly, being from South Carolina, he has strong indications on voting. And the lines here in Arizona are, they're half mile long, 4 deep. I mean, it's really a big election here. As a matter of fact, the sheriff in Joe Arapahoe, he's been sheriff for like 60 years, I think, up in the Phoenix area. He's being challenged by the George Soros group. Soros put $2.5 million into the competitor to Sheriff Joe. So it's going to be I'm sorry, folks. Duffy, you're in big trouble. Anyway, somebody in the den just said something very, very funny, and so it caught me totally by surprise. Anyway, the answer to that, Duffy, is a flat-out no. But anyway, Joe Arapahoe is under attack, and whether he makes it or not, well, even the Supreme Court here in the state of Arizona has been going against him quite a bit. But frankly, I don't see how Sheriff Joe does not make it. He's just too outspoken, and he shoots from the hip and he tells it like it is. So if he gets knocked off, we're in big trouble, because he doesn't put up with any. He makes the prisoners pay for their own meals. And that's unheard of in the system, for the penal system, which is really good. They have to work. They work outside on the highways and other stuff, but he actually makes them work in order to pay their meals. So we'll see what's going on. But anyway, we'll see how this election comes out. It's going to be interesting tomorrow, no matter what happens. That's for sure. And we'll do our bell tomorrow. We're going to have Bill Koval from WDK Analytics. He's got some really interesting things that I know you're going to like, and we'll get Arch on, hopefully on Thursday, or possibly even the second half of the show on Wednesday, because I do want to hear from him and see what see what's going on. So we'll see. We'll see what's going on and with that, and we'll do one thing at a time. Okay, let's see. We've got a break coming up here pretty soon, I guess, and then we're going to be back on the old circuit to see what happens here. I don't hear the thing going off. No other questions here. Oh, someone asked a question about Apple. I have to agree with John Logan that Apple does look, it's got a bearish bias to it. Had a lot of resistance up at that 118, and even yesterday with the market going crazy, Apple did not, rally very much. And whether it's going to continue or not, we'll wait and see. But Apple still looks negative to me.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. I wanted to end the show here with a little announcement. Arch was tied up with some things that he had to do this morning, so it was very important, so he couldn't do it. So tomorrow we're going to have him on at 9 o'clock tomorrow, and that'll be followed with Bill Koval at 9:30 talking about this. I want to leave you with this chart of the New York Stock Exchange Index. We completed that big correction down there. We had the big move up, If you look at what happened at the Brexit vote, you'll see had the big move up. We could be looking at something really dramatic to the upside, folks. So if you are short the market, make sure you use a stop. And believe it or not, if you're long the market, make sure you use a stop, because strange things have happened, and they usually do. So just be very, very careful during these times, as you should at all times. You've got to be able to protect yourself, because you never know how much you're going to make on a trade. The only thing you can control in the risk-reward equation is the risk. So keep that in mind. And Duffy, don't do that to me anymore. You made me laugh too hard. I just couldn't believe that. That's a good one, Duffy. I don't get thrown off on off kilter very often, but that was you did catch me offside. So keep your guards up. That's basically what I tell you. You know, if you do that, you're going to be just fine. These markets they're going to be tradable. That's the best part about it. It's absolutely terrific for pattern recognition. You just can't make this stuff up. These things just act too nicely to not pay attention to it. So that's the key to watch here, and pray that the person that you voted for won. And if they didn't, we're still going to be all right. There's going to be checks and balances along the way. Whether they're as good as you'd like to see, we don't know, but that's going to be an interesting thing to look at as we look at these markets. Tomorrow's going to be a lot different than today. This much I can tell you, but you don't have to be a pattern recognition person or an astrologer, to figure this stuff out. But we are going to see some really wild moves, both on up and down, without any trouble. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.